So guys, basically we're talking about aligning your time frames, multiple time frames, being able to do your top-down analysis. It's called the top-down analysis. Top-down analysis is aligning your time frame from the monthly or weekly down to the 5 minutes, 15 minutes where you take your trades. Why multiple time frame alignment is important? If you trade only 5 minutes or 15 minutes, you're reacting. You don't actually know your destination. You get trapped by the internal liquidity, what's happening in here. You get trapped with what's happening in the internal liquidity. When you start from the higher time frames, which is like the daily time frame, start from the daily time frame, you know where price is going. You stop counter trend trading. You stop emotional entries. You actually know the direction of the market, where the market is heading to. What's the market? What you actually think ahead of the market. Align your multiple time frame alignment makes you understand more of where I'm heading to. So I'll be using the 4 hours time frame to teach this. Very simple and very interesting topic. So now, from the 4 hours time frame on AUD USD. Now, monthly time frames are macro liquidity. Weekly time frames are external range liquidity. You can also use your 4 hours time frame for your external range liquidity, because the 4 hours almost daily is biased where the market is heading to. So you can also, daily and 4 hours are almost like same structures. So 4 hours mainly shows you structure, and you can also use it as your external and internal liquidity. You get. Now, during the top-down analysis, first you ask where is the external liquidity, where is the premium and discount. You know how to use your Fibonacci to from the low to the high. So below this 50% zone, below the 50% zone is your discount, and above it is your premium. So you should be able to know this. Now, how do we get to figure out external liquidities on higher time frames, which is the 4 hours time frame, for example? How do we figure this out? First, we are looking out for an MSS, a market structure shift to the bullish or bearish side of the market. So clearly on AUD, this is the MSS, right? Because it broke structure to the upside. Now, because this zone broke structure to the upside, the other block there below it becomes a protected low using the 4 hours time frame. This becomes our protected low. So, and this becomes a protected high. So every single thing we are trading right now is between this high and this low, because that's like our external liquidity at the moment. So what's happening inside of it? All this happening inside of it called internal liquidity. So you see how I'm gradually aligning my trades. I'm gradually aligning the time frame. I'm using the 4 hours time frame to know the external and internal liquidity. And then the next thing is the buyers of the market. Currently, you can see it's either the market heads to the external liquidity or the buy side external liquidity or the sell side external liquidity. So the next thing is I want to know using the 1 hour time frame. I'm trying to get a better structure of where which of this external range liquidity should the market hit first. Now, as you can see, we have been on an uptrend. First, you're checking. First thing first, you have to know the trend you are at the moment, and we are on an uptrend. And then the market is selling, breaking lows, right? Breaking lows, consistently breaking lows. Broke low, this low again. So all this happening right here are all internal liquidity heading us to the external liquidity. Right after breaking these lows, and I guess mitigating this zone. After sweeping this zone, the market started buying and then broke this. I'm literally analyzing the market right now. So first, I use the 4 hours time frame to know my external liquidity, buy side external and sell side external. That was what I used my 4 hours time frame to do. So I move to the lower time frame, 1 hour or 30 minutes to check structures. To check out for break of structures. Which break of structure should lead to the buy side liquidity or the sell side liquidity? And from what we can see here, literally the market is breaking structures to the downside, but then market started reversing from here, breaking this structure and breaking this high. Breaking this high also, and closing with a full body candle above it. So with these structures being broken, with the clear break of structures, what we are looking for now is a buy, a zone to buy. And what we look out for before buying is an order block with displacement, meaning another block that gave us strong displacement. Or FVG, which is your fair value gap, and in overall a liquidity sweep. So since I'm looking for a buy, I'm marking out my liquidity. This is my liquidity, meaning I'm expecting the market to sweep this. And where is my other block? The other block that gave me a displacement. This is the other block that gave me a displacement. This other block gave me a displacement. So that means If I want to take a potential buy, I'm waiting for first market to sweep my liquidity. Market should sweep my liquidity, mitigate my FVG or order block. Right now, I see no clear FVG around there. There's no clear FVG around there, so I will definitely be using my order block. So I'm expecting the market to come down to that zone, and then from there we'll continue the buy. Or it's all about sweep of liquidity, and as you can see, this structure shows that the market should buy. There should be a potential buy. This particular structure here that was broken shows that market should buy, but we are just looking for a zone to fit in, and then we join the buy. So that's how it works.